Right, we get started. Right, I was saying all these, right, are the employer's property, right? All these are the employer's property. So even though James developed this himself, right, okay, it still belong to the employer, okay? There's no mention about whether he's asking for permission, right? So now here Hightower is planning to copy and take with him. All right. So if you do that, right, he is guilty of violating 4A. All right. So he's in violation. So here the key thing is accept with the consent. Right. So the departing employee may not take right all this. All right. Because if you take such material, right, so the keyword here is you may interfere, you may cause harm, right? You're depriving the employer of profit, right? Interfere, you're causing harm, right? So taking any employer record, even those the employer prepared, even if you prepare it, now you still violate it, you still violate the standard, all right? Right. So the next case is the issue is about ownership of completed prior work. Right. So Laura, right, unemployed, right, wants a part-time consulting work while seeking a full-time analyst position, right? So during an interview with Fear Associates, right, Clay is told that the firm has no immediate research opening, but will be willing to pay her a flat fee, right? So just willing to pay her something, right? To complete a study of the wireless communication industry within a given period of time. So, right, so she had an assignment, right, at Fear. Clay will be allowed unlimited access, right? So now she's given this and would be welcome to the office and use whatever support, right? So she's using all these support facilities, right? Sophia's research director does not seek any, yeah, I mean, the director does not seek any exclusivity for Clay's output, right? So, and the two agree on the arrangement of a handshake, all right? So, gentleman's agreement, right? So, as Claire nears completion of the study, she's offered an analyst job in the research department of Dow and Co. All right? So, this is a new employer, and she's pondering submitting the draft of a wireless study for publication by Dow, right? Wow. Right. So, here, right? Uh, right. So, the key part here does not seek any exclusivity, you know, the previous employer, right? So basically, Laura is not under any written contractual obligation, right, to Fear Associates. Okay, but then again, what she has done, I mean, actually still belong to Fear and Associates, right? So if she were to do this, right, you know, uh, submitting the draft of a wireless study for publication by draft, if she were to do this, right, she must seek consent. All right. So the key issue here is, right, whatever is done, at Fear Associates, right, whatever is done here, right, it still belong to Fear and Associates, right? It doesn't belong to her, or neither should, it belongs to Dow. Okay. So the question is ownership, right, of this completed prior work, at Fear Associates. It was done here, right? So, all right, the key points here is, right, in essence, she was treated like an employee, and the employer does not seek exclusivity, right? There's no written contractual obligation. But then morally, right, uh, I mean, she should still be loyal, quote unquote, to Fear and Associates, right? Because what she has done, right, still belong to Fear and Associates, right? So if she wants to use it at Dow, right, she must get consent from Fear Associates. All right. I hope my explanation is clear. Yeah, I mean, here you've got it in your notes, right? Yeah, all right. Although under no written obligation, to Fear, right? Right. She has an obligation to Fear act on, on the output of a study before Dow and Company or she herself use the information to their advantage. Okay. Right. So that means permission is important. Right. Unless Fear give permission or waives its rights to her wireless report, right, then she'll be in violation. Right. If she were to immediately recommend to Dow, right, the same transactions recommended in the report to Fear. All right. Okay. So there's two parts here which you shouldn't do, right? I mean, doing this, right? This part here and doing this. Take anything. She must not take from Fear anything, any research file, or property that she may have used, because these belongs to the former employer. Okay. All right. So remember, there's 2 points here. Okay. Right. Next case is about ownership of completed prior work. Right. Emma, right, recent graduate, right, candidate in the CFA program, spends the summer as an unpaid intern, right? So basically, she's not paid, right? Unpaid intern at Murdoch and Lowell. Murdoch and Lowell is attempting to bring the firm into compliance with GIPS standards, and Madeline is assigned to assist in his efforts. 2 months into her internship, Madeline applies for a job at Macmillan & Co., which has plans to become GIPS compliant. Madeline accepts the job with Macmillan, right, before leaving Murdoch. She copies, right, the firm software that she helped develop. Yeah, she helped develop. And she believes this software will assist her in a new position. Yeah, of course. But then again, this is the same case as the previous case, right? So this software, right, this software, right, still belong to the previous employer, even though she helped develop. Okay, so if she copies it, right, especially without permission, right, she's violating the standard. Right, has she violated? Yes, right. Right, she's an unpaid intern, right? So even though does not receive any monetary compensation, right, okay, that doesn't matter. It doesn't matter, right? Because basically she has used the firm resources, right, in creating the software, right? So basically, even though unpaid, right, the experience working there, that is her remuneration, right? She's paid the experience, right? So she's considered an employee because she received compensation and benefits in the form of work experience and knowledge. All right. So by copying the software, right, she has misappropriated, without permission. Okay. Now this is still the old employer's property. Okay, that's a key issue. Right. Next case. Dennis has hired Sam Chisholm, who previously worked for a competing firm. Chisholm left his former firm after 18 years of employment. When Chisholm begins working for Elliott, he wants to contact his former clients, you know, because he knows them well and is certain that many will follow him to his new employer, right? So this is very clear cut, right? So is Chisholm in violation of 4A if he contacts his former clients? Of course, right? Former clients. This belongs to, his old, uh, you know, his old employer. Right, so he has violated, right? So, I mean, the client list, right? Client records, property of the firm, all right? So if you contact the former clients, you know, right, for any reason through the use of client list, right? This client records are client list, right? So you're violating. Right, so this is just an extra point, right? So he's leaving, right? So basically, there should be a non-compete agreement here. Okay, so usually this would cover the former clients, this non-compete agreement. Okay, so this non-compete agreement will cover contact with former clients after the employment, right? So obviously the previous employer, obviously no previous employer will want you to contact the former clients, because if you contact them, that means this is tantamount to stealing the former clients. All right. Right. So if you say, I mean, this is a bit vague actually. Simple knowledge of the names and existence of former client is not confidential agreement. Right? Just as skills and experience, an employee obtains while employed are not confidential or privileged information. So it depends on what you mean by simple knowledge. Okay. Maybe you remember the phone numbers, right? The contact details of the in your head. I mean that is simple knowledge. But where do you draw the line? That's a question, right? Right. So this part is okay, right? You using experience and knowledge gained at one employer from being used as an employer. All right. So that's actually it's not about that, right? So the real issue is about contacting clients of their previous firm, right? Okay. In the absence of a non-compete agreement. But then again, most employers, they will want you to sign this. Okay, no previous employer will be that stupid, right? So you're free to use public information about the former firm after departing. So again, this public information, is different from the private information that you get as an employee, right? So you're not allowed to use this private information that you gathered while you were an employee at your former firm. Okay. Right. So this is the comments are quite long, right? So in the absence of a non-compete agreement, right? If you don't have this, right? As long as Chisholm maintains his duty of loyalty to his employer before joining Elliott's firm, does not take steps to, so he's doing all the necessary things, right? Does not take steps to solicit client until he left his firm, does not make use of material from his employer without permission after he left, right? Well, as long as he do all this, he's not in violation. Okay. Right. Next case. Now, here is in the process, right? And then that means this guy is making preparations to start a new firm, right? Gardner Allens, right, currently works at a registered investment company as an equity analyst, right? So without notice to employer, right? She registers with government authorities to start an investment company that will compete with employer, right? However, she has not actively sought clients, right? So now, basically, what Gardner is doing, right? She's just doing some registration, right? Yeah, this company is competing, right? I mean, she's just doing registration, just doing some preparation, right? So this registration, for a new business, right? This does not conflict with the work of employer, right? So here the assumption here is this is done outside of office hours, right? Right. Of this outside office hours and right, and on the assumption that she has not done any other thing because there's no mention about Gartner soliciting clients, right? There's no mention about that. So here the case is just about registration of a new company. That's all. So on this basis, right, she has not violated. Right. So on this basis, she's not violated because she's just preparing for a new business. Okay. I've said all this. Right. So now I'll finish with 4A, loyalty to employer. Now I'll talk about 4B, additional compensation arrangements. How do you deal with this issue, right? So basically, right, this standard says that we must not accept, any sort of gift compensation, right? You know, which might, create, expected to create a conflict of interest, right, with, the employer's interest, unless you have a written consent, right, from all parties. Okay, so this is a key point. So when is it applicable? Right, so you'll be violating when permission is not obtained from the employer, right, right, before accepting direct compensation or other indirect benefits from third parties. So the issue is this additional compensation arrangement, right, is usually from third parties, not from your employer, right? For services rendered to the employer or for any services that might create a conflict of interest with the employer's interest. Okay, so it's from third parties. Right, so the key thing is permission, right? Permission is not obtained, all right? So what do you mean by permission here, right? Now, permission is just not oral permission by word of mouth, right? So it's retrievable, documented, written consent, right? You must be able to retrieve it, you must be able to find it, and it's documented properly, right? Written consent. This is what is meant by permission here. Okay. Right. So these are just some recommended procedures, right, for compliance with this 4B. Right. So you must make immediate written report, right, to employers specifying any compensation proposed to be received, right, in addition to compensation or benefits received from employers, right? So this any compensation, as I said, right, are from third parties. So written report, right, this point here should specify the agreement terms, regarding this additional compensation. What is it about? Right? Why you are being paid this additional compensation? So it is nature, right? And how much you're getting, right? And how long is it for? Okay, right. So now we talk about some case studies, right? Jeff Whitman, portfolio analyst for Adams Trust Company, manages the account of Carol Cochran, a client. Whitman is paid a salary, right, by his employer, and Cochrane pays the trust company a standard fee based on the market values of the assets in the portfolio. So this is okay, right? This is okay, right? So Cochrane proposes to Whitman that any year that my portfolio achieves at least a 15% return before taxes, right? You and your wife can fly to Monaco at my expense and use my condo during the third week of January, right? Now, Whitman does not inform his employer of the arrangement, right? And vacations in Monaco the following January at Cochrane's guest, right? So here he does not inform, right? So I was saying you must have written permission, right? Written permission, right? Right. So probably not right. Even though this right this benefit, right, this benefit here can fly to Monaco, right, may not affect his partiality or impartiality. The key issue here is that Whitman did not inform his employer, right, in writing, right, about this supplemental, right, and it's also contingent because he may not get it, right. So he was saying any year that my portfolio achieve at least a 15%, so he must get 15% before he's allowed to fly to Monaco, right? So the nature of this arrangement, basically, could have resulted in partiality to Cochrane's account, right? Right? It could have, right? So that's why informing the employer is critical to determine whether this arrangement, uh, you know, would create impartiality. Okay, all right, because this supplemental benefit, even though it's contingent, it may not happen, right? Is substantial enough to influence his objectivity, his partiality. I'm not saying his objectivity, his partiality. It's just that he might pay more attention to this client, Carol Cochran. Okay, right. So now this is so informed, right? So this is about notification of client bonus compensation. So this is more or less like a bonus, right? Because he may not get it, right? Okay. Has he violated? Yes, right? Because he failed to inform of this supplemental contingent compensation arrangement, right? So, I mean, the nature is quite substantial, right? So it could have, detracted from Whitman's performance with respect to other accounts. So she could be impartial. I mean, it could have, sorry, I'm saying it could have affected her impartiality. All right, so she must obtain the consent of his employer, right, to accept such a supplemental benefit, right, additional compensation arrangement. Right, next case is about notification of outside compensation. Again, this is additional compensation arrangement. Now, Terry sits on the board of directors of Exercise Unlimited, right? In return for his services to the board, Jones received unlimited membership privileges for his family at all Exercise Unlimited facilities, right? So this is the additional compensation arrangement. Jones purchases Exercise stock, right, for the client accounts for which it is appropriate. All right, he does this, right? So Jones does not disclose this arrangement to his employer, right? Because he feels that he's not obliged to, probably, right? Because he does not receive any monetary compensation, right? Even though he's sitting on the board, he doesn't receive a director fee, right? So, but right, so right, so now he has received this benefit. I mean, this is a bit weird, right? Now, who gave him permission? Probably it is management, right? See the board of directors. Below the board of directors, there will be the management team. Probably it is the management team who gave this unlimited membership privileges to him. So maybe the board of directors doesn't know about it. Okay, all right. So has he violated? Yes, right. To disclose to his employer, right? Receive in exchange for his services, right? So the key issue is failing to disclose. Okay, so right, so basically, right, this non-monetary compensation, may create a conflict of interest, right, in the same manner as being paid to serve as a director. Okay, right. So 4C, responsibilities of supervisors, right? Okay, so probably you'll be in, as a when you're in employment, right? Probably you'll be in the position of a supervisor, right? Or you may be subject to a supervisor, right? So nevertheless, you have to know about this 4C, right? So basically, okay, now this part here is about right? You must make reasonable efforts, right, to detect and prevent violation of the laws, rules, and regulation and the standards, right, by anyone subject to your supervision or authority, right? So supervisors are responsible for this, right? Okay. So these are the highlights, right, of this, right? So there must be supervisors must know what are the detection procedures of their subordinates, right? And supervisors must implement some compliance procedures. Their subordinates must be subject to certain compliance procedures, and whether they, how do you deal with inadequate procedures? Because no procedures are foolproof, are complete, right? And how do you enforce any non-investment related policies, right? You know, as a supervisor. So basically, first we talk about what is supervisory responsibility, right? You're having supervisory responsibility when you have subordinates, somebody below you, right? Also, these are also employees as well, right? Who are subject to your control or influence, right? So you are, supervising a group of subordinates, right? So you as a supervisor, you must have in-depth knowledge of the code and standards, right? Okay, so you must apply this while you're discharging your supervisory responsibilities, right? So now we talk about the concept of reasonable supervision here. So what is meant by reasonable supervision? Right, so if a supervisor is asked to say supervise 200 employees, right, subordinates, that is a bit too difficult, isn't it? So what is meant? So I mean, so reasonable supervision will depends on the number of subordinates to be supervised. So it depends. I mean, it depends on the level of supervision required, right? So some supervisors may be able to supervise, say, 10% effectively. Some may be able to supervise 25% effectively, right? So it all depends, right, on the situation, right? So if you cannot supervise, so you have to delegate, right? So you have a sub supervisor, something like that, right? A delegation, you have delegate, right? So delegation is permitted, right? But does not relieve the chief supervisor, right? So this chief supervisor of overall responsibility, overall supervisory responsibility for detection and prevention of errors. So that means, you must delegate properly to ensure that your sub supervisor is, you know, uh, efficient enough, right? Effective enough, right? So this chief supervisor, right, you will have what you call ministerial responsibility, right? We're not talking about ministers in politics, but this word, you must have ministerial responsibility, right? Chief supervisor, okay? Right, so reasonable supervision, right, is exercised by establishing and implementing, right? First thing you must have is written compliance procedures. That's the first step, right? So it has to be in black and white, not oral, right? And you must, as a supervisor, you must ensure that those procedures are followed, you know, and through periodic review. So you have to review it periodically, not just once, you know. So this is basically an ongoing process, right? Okay. Right. So basically, right, if reasonable procedures and steps are taken to institute an effective compliance program, right, but failure in detection of violations still occur, right, 4C may not be violated. So the key issue is may not be violated, may not be. Doesn't mean it's not violated. I'm saying may not be violated, right? So it all depends, on whether these procedures and steps, are reasonable, and whether, how effective is this compliance program. So this is all relative, right? It's very subjective, right? So, right, because it's subjective, right, it's hard to say whether you would violate 4C. All right, okay. Now, you know, so if there's still failure, I use a different thing, right? So if there's still a failure, right, this failure, it may indicate that compliance procedures are inadequate. So as a supervisor, right, you must still take steps to improve on this compliance system, right? Because you know it may be inadequate. Right. So what is meant by an adequate compliance system? Right. So basically, you must make sure that all the procedures are established, is documented, and communicated to whoever are subject to these procedures, right? And make sure that they are followed. These 4 criteria, right? That will make it adequate. Should be, all right? Right. So adequate procedure, right? The keyword is adequate, right? Should meet all the standards, right? Industry standards, regulatory requirement of the code and standards, and the circumstances of the firm, right? Again, these 4 criteria, right? Again, these procedures, right, should be monitored and enforced, right? Monitored, that means it must be improved, right? If it's lacking, it should be improved, right? So, and enforced, you must enforce it, okay? Right. So for it to be effective, right, it must be in place, must be in place prior to the occurrence of any violation. Not this violation then only put in place. So this is before the occurrence of any violation, right? Now these compliance procedures, right? It cannot be 100% complete, right? So that means it cannot be all encompassing, but should be appropriate, right? And anticipative of potential misconduct, right? You're always trying to rule out, get rid of any misconduct, so this misconduct, it may happen, right? So that's why you try to prevent misconduct from happening. Okay, right? So now if it's inadequate, right, in any respect, right, should be highlighted. And now if you feel as a supervisor, if you feel that the compliance system is inadequate, right, the supervisor concerned, right, should refuse in writing, right, acceptance of supervisory responsibility if he or she feels that the compliance system, right, is either absent or inadequate. All right, so this is the step a supervisor should take to comply with this standard. Right, so occurrence of violation, right? If any violation occur, right, what are the steps that should be taken, right? So basically, you immediately start an investigation to to determine the extent of wrongdoing, right? And obviously, you will question the employee concern, right? But you should not rely on the employee statement about how the extent of wrongdoing, right? Or that it will not occur, should not rely. All right. So, and then if you just say just report and warn the employee, this is not enough. All right. Right. So what should you do? You should basically curtail, stop, and monitor the employee's activity, right, to ensure this part here, violations will not recur. Okay. So these are the steps to be taken. Right. So do you want me to continue or you have another class? We are going to end soon. Right, so I just finish off with this before the cases, right? Recommended procedures for compliance, right? So basically, you must have